Good morning.
Good morning, everyone.
Good morning, everyone.
Sano and Dan, how are you guys?
Good. Without headphones. Good morning. In a nice quiet room.
Yeah, you might actually your audio is a little low, Dan. I want to maybe just move a tiny bit closer, or
I will do that. Thank you for the comment. Okay, so
we were talking about a few different things we could discuss today, and one of the ones that was topical, and it seems to be the way that most of these items or discussion points come up, is something that we were dealing with, or one of us was dealing with on a deal. And Dan, you had a deal that was meant to firm up today, but the buyers have asked for an extension on their financing condition. They've done the property inspection, everything. Not that the house is necessarily fine, but they're
we're past that and really just down to financing conditions. So I just thought it might be worth talking about what goes into a financing condition when a buyer is working through that process. What are they doing? Sometimes from the seller's side, you're just sitting back watching, right? And you're waiting for this date to come, and the day arrives, and it's just a question mark. What's happening? Where are we going? So what the buyers are typically doing, in a typical purchase, a buyer will go to a lender, whether it's a bank or a mortgage broker, they'll get pre-approved. And so pre-approvals are the bank looking at a preliminary set of documents that a buyer provides. Maybe it's, I don't think it's even a T4 at that stage. It's probably like
maybe an employment letter
or just a statement from the buyer saying, this is how much money I earn.
This is how much debt that I have.
This is how much debt I have. Yeah. Some fairly preliminary numbers. This is my monthly credit card statement or household bills, to get a sense of what their take home is. And they give them an approval saying, based on the information you've provided, you can spend so much, or we'll give you a mortgage of so much. And, that combined with your down payment allows you to kind of take that first step. So is there anything I'm missing there in that pre-approval stage?
No, I think you rightly pointed out that they approve the purchaser. They look at their finances, they look at their capability the capacity to repay, and they approve the purchaser. They don't approve the house. And I will add that it's as much, if you think about the interest, it's as much about the bank trying to get their foot in the door as it is anything else. So they use pre-approvals to entice purchasers, new buyers, and new clients into the bank. So they kind of have them on the hook. So the bank wants your business, and that's their marketing ploy. In real estate, it's very valuable to be sort of first at the gate. And so if you're, let's say if you have a pre-approval before you even start looking, banks often can refer you to realtors can refer you to mortgage brokers, etc. So the first one at the gate has a lot of influence, and of course that shouldn't be used unduly, but it's a marketing thing. So I'll just say that the pre-approval is as much a marketing thing. It gives them a sense of confidence. It does give them a general guideline of what they can buy, but it's not an approval for financing.
Yeah. So yeah, they approve. And I would go further to say it's simply a pre-approval, because once they get into a formal approval stage, they take the purchase contract, if there's rental income to consider, then they start digging down. Then they start asking for the last 3 years of tax filings. They start asking for more detail from the buyer, and then they go and do also an investigation on the property. And so the investigation on the property might be a desktop review, desktop appraisal. Obviously, information is available on systems like MLS and city assessments, and so you can do a bit of due diligence on the property to understand the value. And the banks want to ensure that what they're financing actually has value and the value that they're financing. So that is that all comes in that due diligence phase. And so what we're why a buyer might come back for an extension, either the lender or mortgage broker is slow and hasn't finished their due diligence and given that approval. Buyer could have maybe bad credit, and maybe they've exhausted their A lenders, and there's no A lenders out there, and now they have to look to a secondary market and essentially restart that process. So, the seller then has the choice of, do we play ball here and try to get this buyer across the finish line, or have we lost confidence in this buyer's ability to finance this purchase, and go back to market? And so that's often what's happening during the financing. And sometimes maybe on the last day you'll get a formal approval saying buyer's approved. Now we're just waiting on the appraisal, because obviously that's a cost incurred by somebody on the buyer's side. They don't want to spend that money until.
Yeah. So what do you factor in making that decision when you're representing the seller? What do you think about in terms of, or how do you advise the seller, whether we should extend it or whether we should just go to the next guy? I suppose if you had another buyer on the hook that was, that was threatening to write an unconditional offer, that might be one thing. But
Absolutely.
Then what would you guys say?
Yeah, I think first you look at the buyer's down payment, seeing how much they're bringing to the table. If they've provided any rationale for the extension, if it's timing, if it's declines, that might factor in. If there's other interest, whether they've waived other conditions, if they're still hinging on a property inspection, you might push them to complete that property inspection before you give them an extension on financing, so that they're making headway on their conditions. They're showing evidence that they are actually progressing in this process, and not just
they're
drawing it out. They're committing.
Yeah, I think it boils down to communication too from the other agent. If they've been communicative and staying in front of it, and you don't get an email at, say, conditions are Friday 9 o'clock, and you get an email at 7 o'clock on Friday saying, "Hey, we need an extension," then
that kind of sucks.
Maybe you tell them to pound sand, but maybe if you knew on Wednesday, like, listen, the bank's been slow. Here's the pre-approval that we had. That whatever information that they have, and if they shared it with you, and you know that they are making genuine efforts to satisfy the condition, then maybe you're more willing. And also, as you said, if there's other interest that's floating around, you can use that. You can leverage that. And if there's not, maybe you just say, okay, let's work with them.
Yeah, aside from the fact that everyone knows Friday nights are realtor night off.
Right. Yeah, maybe we should write our conditions Thursday at 9 o'clock instead of Friday.
So if you're the buyer representing the buyer, then how do you what steps do you take to ensure that that doesn't happen, that the buyer gets his approvals on time, and that he's not asking for an extension? And if you had to ask for an extension, then how do you handle that?
Well, I think to Mike's point, it's communication. So you're communicating with the mortgage broker, with the buyer, making sure that, if let's just say you got an accepted offer on Thursday night, they're not waiting till Monday to start communicating with their mortgage broker. They're getting on it Thursday night, Friday morning, because that's a loss of a business day, or and a weekend, right? I mean, weekends in real estate are important. So you want to make sure that if you're going to be looking for an extension beyond another weekend, that's a consideration for a seller. And that's something that a buyer's agent has to keep in mind. So communication is probably the biggest component in making sure, doing what we can as a real estate agent to make sure there's progress being made on the buyer's agent.
What about before they even start the process of looking? Do you think? Well, I'll just chime in on that. But I think that it's important to have a good mortgage broker, or at least a bank. You don't just say, "Are you pre-approved for a mortgage?" Yeah, we're approved for $500,000. You think you want to challenge that a bit, find out who they're approved through, um, and if they don't have a pre-approval, the benefit of going to a broker, and what value does a broker bring? A broker gives you better rates often, and the broker knows where to send the file so that it gets approved without being without having to bounce it to the next applicant or the next bank, I should say. So and the danger in that is that if you take it to the wrong bank, like let's say the guy's self-employed, and he makes good money, but he's self-employed, he's only been employed, maybe he's a new immigrant. Every bank has different rules around that, different frameworks, and some banks are just like, we don't do self-employed, we only do, they have to fit in this box. Some people do. Some banks specialize in sort of new immigrants because that's their market, that's their policy. They want to bring on new business. So a broker, the value of a broker is to send it to the first right bank so that you don't get bounced. Because when you get bounced, the danger is you can go to the second bank, but then they've seen that they pulled a credit bureau, you've been declined by the first bank, and then it makes it harder to get approved on the second bank. So that's the real value of going to a good broker. So if they say, yeah, I'm dealing with my bank or whatever, we always just challenge it a little bit, I think.
Yeah, that's true. When we meet with buyers, a lot of time we'll ask, have you been pre-approved? And they might comment that, yeah, we went online to this bank's
yeah, there's all that,
affordability calculator, and we think we can afford this. And that is definitely not a pre-approval. That is that's simply an online tool that runs some numbers. So yeah, if you hear that, that's cause for pause and some.
Are there any red flags you guys would see if a buyer showed up to a buyer interview that would make you think that this person is not at all ready to buy?
If they're looking at a first-time home and they pull up in a Cadillac Escalade, then that might be obviously when they're carrying a lot of monthly costs, that's something it's always a challenge for mortgage brokers to reconcile, right? They have certain debt service needs that they have to provide to their lenders. So
yeah,
if they're carrying a heavy monthly payment on a car, for example, that's something that can be it shouldn't, not to presume that it's a problem, but it's something that factors in.
Yeah, we used to actually go through the we used to check their qualification. Is what I used to do when I was working with buyers. We'd sit down and look at their TD, total debt service, and their at those ratios, and make sure that they match. And a good realtor should know what those ratios are. They change from time to time, but the standard, whether it's 42% TDS or and just know, like, yeah, if they're driving an Escalade or they just bought a new car, or they or I don't know, they do something in between the period of looking for a house and closing on it, you need to kind of forewarn them about that, because that could really kibosh a deal.
Mm-hmm. One of the other things that I know we have in our toolbox that I find pretty helpful is the that sort of estimated cost, the cost of buying worksheet that we do, that not only highlights what might be some of the not hidden but less well-known costs of buying, but also the timing of those, and say like when you need to have the deposit, because that comes before you need the full amount for the down payment. So you need to have $10,000 sort of just sitting there, or 20, or whatever the number is, and then along the way, what some of those other expenses might be, like maybe your bank or lender. In some cases, they'll pay for the appraisal and it's a cost of their doing business. In some cases, they roll it into the mortgage. In some cases, they pass it on directly to the buyer. And so just knowing what that cost might be, when it's going to happen, a property inspection, condominium document review, all those things that come up along the way and when they happen, I think is also pretty important to have or to be mindful of, so that the buyers know when they need to have that cash kind of ready to go. and how much sort of the total cost of the purchase is going to be, because often they'll show up and say, I have $60,000 for a down payment, so I want to buy this amount of a home, assuming a 5%, or that I'm putting 5% down. But that's not the way that equation works, because there's other costs sort of built into the transaction.
Yeah, like CMHC fees, we go through that as well. We'll sit down and go through with the buyer, the cost of the CMHC fees, because you can get it. You can certainly buy a house with 5% down, but if you have, for example, let's say you had 9% cash available, we will advise clients to beg, borrow, and steal the other, $1,000, that 1%, to get them to the 10% mark, because the CMHC fee is thousands of dollars for every ratchet, every 5 points that you ratchet down in the down payment. So from 5 to 10%, the CMHC fee goes down, and goes up the other way. So if you're only $1,000 away from getting to the next down payment point for like 9% to 10%, borrow it from your rich uncle, anybody, because that CMHC fee is thousands of dollars. It could be, several $1,000s, and you don't get it back. And you don't pay it up front. They add it to your mortgage. So in fact, you pay for it over 25 years with interest. So it's even worse, actually. That's all good advice. And then we used to spend more time going through the amortization schedule with them and giving them tips on how they can pay down their mortgage faster. And that's always good, good advice too. I'm not sure how many people spend a lot of time on that, but our process is that we spend, a good hour or so with buyers ahead of time. And that hour saves them a ton of money, because it goes through all of that stuff, how they can save money on their mortgage. I know we've used it, and it's worked out for us.
Mm-hmm. Anything else you guys want to address or talk about while we're on the topic of financing in general and conditions? Or is that?
Well, you mentioned closing costs, and I'll just maybe put a bow around that, because they have $60,000, but there could be, maybe $3,000 in closing cost with legal fees, appraisals, and so on. And so you need two things for the down payment. You rightly pointed out that if you need that, and you got it, I got $20,000 for a down payment, but it's sitting in a GIC, and maybe I can't break it for another month or something like that. The timing of that, you have to be aware. Mm-hmm. It's going to influence your purchase, and then make sure you have that extra $3,000 or whatever, plus, moving cost, things like that, which can amount to maybe, $3,000 to $5,000 just to get in the door. So mm-hmm. They have that on hand.
Yeah. I think that it covers a good bit of ground there. We also had a few thoughts about, what else was it? Financing conditions period. Well, maybe while we're on conditions, are there any other conditions in the contract that might affect the financing condition? So, for example, does the bank ever ask to see the property inspection condition, or how can the condition of the home affect that property inspection? And I'll raise this question because we have a buyer interview today with somebody who's coming in. Mm-hmm. They are working with a secondary lender, and the secondary lender, I've already spoken to the mortgage broker, and they've said the property needs to be pretty straightforward. No wood foundations, no aluminum wiring, no added risks to the property, because the secondary lender, the client has gone to them because they are non-traditional already. So I think my sense is that they then want the property to be as down the middle as possible to remove some of the additional risks on lending for that.
In fact, we have a deal that just closed that the buyer, who was not our buyer, came back to us and said, "Do you know of any?" And now the deal closed with an unconditional purchase, no conditions, cash, but they are going to get some financing on it, as they typically do. And they said, then the bank wants to see an inspection, so they have to get it inspected after the fact. Now that could pose a problem, or not. But most banks now are asking for the inspection report.
Right.
Yeah, a lot of banks. I shouldn't say most, but a lot of them are. Is that your experience?
I haven't seen a lot of banks request the inspection report itself. How the inspection I've seen can impact financing is if there's an item that a buyer and seller decide to negotiate. Just take, for example, a poly B or water tank, furnace, whatever, right? So, the furnace needs to be replaced in the next 2 years. And they say, well, instead of the seller replacing it, let's adjust the price of the home by X dollars, $3,000, $5,000. So once you have that amendment to the purchase price complete, I'm seeing a lot of banks. I'm not quite sure the rationale for this, but they reset the approval process, right? So if you're 7 days into your financing approval process and you change the price on the contract, you get a full reset. So now you need another week on financing for the bank to redo their numbers, which, in my view, I'm not quite sure the rationale for that, when it would only improve ratios, I think. And, unless they consider the fact that now, unless they take a context of that price reduction into account, saying the buyer's now short $5,000 cash based on this amendment, they have to pony up that money, and it's, so
which is something else there has been pushback on sometimes doing the holdback, so the buyer has the cash to go do whatever that repair is. Mm-hmm. The banks have seemed to have stated a preference to want to do the price reduction rather than a holdback, or have that repair done prior to possession, so that in some cases it's the insurance. Like, I know that in a few instances with say a failing hot water tank, the insurer of the property wants to make sure that that's not a risk they're taking on, so that has to be done before they'll issue insurance. But sometimes it's also the banks that they refuse to do a holdback to allow the buyer to go make that change. They just want to see the price reduced.
Yeah. And all of that to explain why we often hear mortgage brokers curse the banks. Because they're like, oh, and often I hear a lot, oh, the banks aren't getting back to us. We can't get a response from this bank. We can't get a reply. We can't, So, yeah, they can get busy, especially when people are, like, when rates are going up as they are now. People are clamoring to get into pre-approvals. And by the way, we should say that that's another reason to get a pre-approval, because you can lock in a rate, which we kind of glossed over. But but it is a marketing ploy to get them to kind of lock in. But still, when we have a rate increase, banks are busy as heck, and it's hard. They clamor, like mortgage brokers clamor to get their attention, to get deals done in a timely manner. So that's part of the problem.
Any other? So I mentioned like a wood foundation or aluminum wiring or something like that. Is there anything else you've seen that a bank would want to know about a property before they lent on it, that is more related to not just deterioration of the home or poor upkeep, but is rather the original construction or how the home was built in the first place? Anything else that comes to mind that is something that a buyer might want to just sort of look out for? Maybe another one is poly B plumbing.
New homes on old foundations, perhaps.
Sure.
In the inner city, we do often see an old foundation that's in good condition still. The top of the house is removed and the foundation's kept and built on. that's something that some lenders might consider. You know, a home inspector might say the effective age of that home or the foundation is say 50 or 60 years older than a new build. So
Mhm.
reducing the economic lifespan of that property.
Old homes with lead piping, things like that, you know, galvanized piping. I think that sometimes becomes an issue.
Right.
But other than that, I can't really think of anything that's comes top of mind.
Okay. I mean, we had some other broad topics to hit on, but I think maybe it might be better just to do a quick touch on sort of the market activity and what's happening, because we're at 25 minutes already, and um, I'm sure that our audience, whatever it is, thinks that this is gripping stuff, but maybe going to 45 minutes or an hour is too much. So, I mean, Dan, you just got back from a course, but you're the broker for our company. What are you seeing in terms of the general activity for Real Broker and what's happening in the market?
Oh, the marketplace has slowed down a bit. I think that the news came out last week that the sales activity slowed down by about 11% in Calgary overall. What's interesting is that the detached market has slowed more than anything, and the apartment market is actually what's buoying up the sales activity and pricing. So that's contrary to what we've seen in, I want to say the last decade or so. I mean,
And I think the point there is that because of the interest rate hikes, some of the focus is shifting to more affordable property types.
That's right. Yeah, there's a flight to affordability, which is what we've seen from other provinces coming to Alberta, and now within Calgary. I mean, the detached homes are, the average price still increased, but it's that price increase has slowed, and I think people are looking at more affordable options now in condos.
I think that's going to be. Well, I think that'll be pronounced in the next year. I'm pretty optimistic about the market over the next at least year, despite the headwind of interest rates and our what's happening in our economy, high inflation. But remember that real estate is a protection from inflation. So it rises, it goes up in value, and somewhat protects you from inflation. So it's not a bad place to park your money. There's a lot of things happening in Alberta. There's de Havilland, the news of de Havilland, 1,500 jobs, or I think that's the right number.
Mm-hmm.
And then WestJet just announced that Calgary will become their hub, their international hub, and that means that's pretty great news. If it hasn't sunk in, that means a lot of flights, new routes, like routes to China, direct to China, out of Calgary. That's pretty amazing stuff. And so you could expect a lot of more economic activity. We're just easier to get to, and everyone I'm talking to in my sphere of influence, that's in Toronto, Vancouver, it's all like, sell and move to Calgary, pack up and move to Calgary. It's like you buy a home for a third or half the value that you've got, and slow down, retire, whatever you're going to do, but Calgary's a great place to go. So we're seeing a lot of that, and I expect that to continue over the next year and counter the headwind of our poor economy and inflation. So
I was at an economic forecast on Tuesday, put on by one of our mortgage broker associates or affiliates, and that was the same story. Was that Calgary, or Alberta in general, is one of the bright spots in the Canadian real estate landscape, where things are challenging or decreasing. Alberta still is leader of the pack in terms of affordability and the not seeing a decline in housing prices or a marked decline in sale activity as well. So it seems like most everybody is somewhat bullish on Alberta and Calgary. There were also 3 developers there. There were I think they said they were going to be putting out a normal year, they said 11 or 1,200 lots. This year, I think they're looking at being 1,600 lots that they're planning to service. So I think all that says that for a lot of people, it's sort of full steam ahead in Alberta and Calgary in particular as well.
Yep. Invest in real estate.
There it is.
Okay. Well, with all that, I think we covered a bit of ground.
I think we did. Yeah. Thanks for taking the time, guys, and whoever tuned in to see us today or will have a look at this afterwards. Enjoy Thanksgiving and have a good long weekend. And we'll see you in a few weeks.
Thanks, everyone.
Okay. Thanks, everyone. Bye for now.
Bye.